hello. Good to be back in a familiar place with familiar people, even if they do look a little bit strange. What happened to you?
Well, I don't know. I was offloaded somewhere, and I'm just fortunate enough to be, I'm back.
Yes, welcome back.
Yeah.
We didn't miss you.
You look like a Congolese kwasa artist.
Congolese kwasa artist. Okay.
A knitted.
If you mean fashionable, then yes. But I wouldn't. You know what? I don't think you would understand this kind of fashion. So
No, we won't.
Perfectly.
We won't.
Yes.
Well,
fine.
I am familiar with the term sapeur. And you look, to the rest of us in the Anglophone world, it's a dandy, and you look like one.
Okay.
Minus a hat, maybe.
Yeah, well, you're not supposed, unless you're a Rufaro, you're not supposed to wear a hat indoors.
Right. Well, he started.
Oh yeah, that's very uncouth.
Flat tops don't count.
Yeah.
Anyway, welcome back. How were your travels?
Yeah, it was great. It was fantastic. I think
it's
always.
New?
Oh yeah, it's always important to, to partake in the rest of the world or where things are normal, and when you come back, you just realize just how abnormal this environment is and how we've normalized the abnormal. So it was actually great and refreshing to be in a normal economy where things actually run and to be talking great ideas and seeing what the world, what's happening around the world. One of which I think maybe we'll discuss it. It's just how crazy the world is in terms of just fundraising. If you look at startups and the amount of money that they're raising, one statistic that I wasn't aware of and I thought was very interesting was, do you realize that in Africa, the fintech startups raised $1 billion in just the first 2 months of the year? That's in January and February alone in Africa. And that's just Africa. In the rest of the world, there's just a lot of money that's being put into tech and fintech specifically. And Africa, and it's Nairobi and Lagos. So what I found very interesting and curious was why Nairobi and Lagos are raising more money than
wait. Pour yourself some. What are you doing? What heated shrubs are you drinking?
Okay, so East Africa, I thought I start with Ethiopia, and I'm having coffee because that's their refreshment of choice. And
are you ever going to tell us what it is about East Africa?
One day, I assume that one day we will actually take a trip to East Africa, and you might realize why it's an important cog in my life.
I'm afraid.
As always,
it's a medium roast. So,
yeah. Well, look, I think that I'm a fan of coffee. I'm a coffee fiend myself. Perhaps it will stimulate you to be more reasonable.
Smell it.
Sure.
Maybe let me open it.
As always, in this part of the world, we are drinking something much more interesting than Tinashe, and we have decamped to the Loch Lomond Distillery, and we're going to partake in one of their single grain whiskies, which is not very different from a single malt. So the difference between a single malt whiskey and a single grain whiskey is that a single grain whiskey can be made with any grain. It can be barley, wheat, or even corn, whereas single malts are always exclusively barley, although this particular single grain is barley, the malt is barley, and it's distilled in a different, single malts are distilled in pot stills, and a single grain whiskey is distilled in a columns still. So this is, it's a very interesting,
it's actually very reminiscent of J&B.
On the nose?
Yeah. You want to try?
It's very subtle, and for a non-age statement whiskey, I find it quite smooth. I don't know what your opinion is.
It's got notes of fruit.
It's on the sweet side of the spectrum.
It is. Yeah, on the tongue, it's nothing like J&B.
Rotten grapes.
Anyway, Okay, carry on. You were telling us about startups. And we won't even try. Where do we have where's Tafazwa? We should get Tafazwa back on the show. Anyway, carry on.
Well, I find it quite remarkable that this is something that is you had to travel for this to actually land on your desk in some.
Okay, we'll let it pass that he could have found it on Google, but anyway.
Well, it's
not that it struck you.
It struck me. It obviously struck me, and yeah, we're busy worrying about currency, right? And whether we'll have a monocurrency or not. So you can't say that this is something that you will easily find on Google. But what I'm trying to say is there's definitely a sense, a vibe, or whether in Nairobi or in Lagos or in Cape Town, that it's startup nations, and there's a lot of funding that's out there that's looking for the next unicorn. And
so why is none of it coming here?
Sorry?
Why is none of that money coming here?
I think that's the point. That's the point I was trying to make, that you only read about it on Google. You don't experience it in Harare. And part of the reason why we don't experience it in Harare is because Harare is just too difficult. It's just too hard. And we've made it a very impossible place to get FDI. If you look at our FDI, none is coming, right? And if you think that African startups have raised $1 billion in just 2 months, what will happen in the rest of the year?
But are our youngsters trying? Because, I mean, you say that.
What's curious and what's interesting, George, that I found out is we've got a lot of Zimbabweans who are, of that $1 billion, we've got a lot of Zimbabweans who've actually participated, but they're not based in Zim. So these are Zimbabweans in Zambia. We saw one Zimbabwean in Zambia. We saw another one in Nairobi, others in the UK, who've participated in this great startup, raising money in startups, and they're not in Zimbabwe. And the reason why they're not in Zimbabwe is obvious. You know, here we're worrying about currency. Nowhere else are they worried about monocurrency and the highest inflation in the world. I mean, try and sell a product where you're telling the investor that you've got the highest inflation in the world, and that whatever dollar that they put in, if they try and get their money back the next day,
it will be 60 cents.
It will be 60 cents or 40 cents if you think about it. And those are the realities, right? So elsewhere, we're not discussing that. And Zimbabwe is placed in a very good place where we have tons and tons of IT graduates, for example, that we're churning out and unemployed. And if we had the right framework, a lot of that money would be coming to Zimbabwe, but unfortunately it's not. And these are the issues that we were grappling with and we were discussing. So to me, just being around that whole startup nation, the unicorns around the world that are raising as much money as they can and are doing phenomenal things. Banking is changing. So when you look at what's happening...
Don't look at me, I'm not a banker anymore.
Oh yeah, good for you. But when you look at banking, the entire back office is being outsourced. That is what's happening in the banking
before it's outsourced
sector.
It's getting computerized.
Yeah.
And what can't be computerized is getting sent to India.
And Africa. I don't know why you're promoting India.
No, even African banks send it to India.
Yeah, well, some of it is now coming back to Africa. What I found very interesting is Hungary and Israel as big spaces for back office, especially in treasury. A lot of the treasury functions are going to Hungary and are going to Tel Aviv.
You know what I've often wondered about this business process outsourcing space and our country? I think we must have one of the highest rates of accountants per capita in the world. There's a heck of a lot of trained accountants here.
Oh, yeah.
Why aren't we the accounting factory of the world? I mean, if we think back to our auditing days, a lot of the stuff that junior auditors do, there's no reason it can't be done over the internet by someone on the other side of the world.
It's obvious what the problem is. Zim is just a very difficult place to sell. Because first you need to sell Zim before you sell the particular companies or before you sell that particular accountant. You have to sell Zim. And unfortunately, Zim at this particular point is just a very difficult country to sell.
So, yeah, but I think I would go a little bit further and maybe be a bit more specific, because there are a lot of countries on the planet that have that are difficult, that have challenges, that still enjoy some foreign direct investment and participate in the global economy in a way that Zimbabwe is not But what we have done is, through our exchange control regime, we've just created this big barrier to entry. So no matter, so you were talking about all these accountants and, youthful entrepreneurs who can do interesting things, right? But if that hurdle, as long as that hurdle is there, right, there's a whole bunch of people who would be incredibly excited about coming to Zim and partnering with the talent that's here. But as long as that hurdle is there, it's just too hard, and they're not interested. And
so let's break down. Let's explain this hurdle.
When you look at a human resource, so when you look at capital or Buccaneer capital and where it's going, it's because there's a particular resource that you can't find anywhere else. So if you look at cobalt, for example, you have to go to the DRC. So whether you like it or not, you end up...
You hold your nose
and
you deal with it.
And you deal with it. But when you look at an accountant, sorry to say, but being counting is ubiquitous.
It's a commodity.
So it's a commodity. So the only thing that was valuable, what he was saying per capita, is that our cost compared to, for example, an Indian accountant, we might actually be
competitive at least.
Competitive at least from a cost perspective. So that could be something that we could sell, but are you going to sell that when you still need to sell them?
Mark Anderson makes the point that software is eating the world, and the software attacks different sectors, at different times. And one of the things about accounting, because the rules are amenable to machine learning and artificial intelligence in a way that, say, other things are not. So, a decade ago, for example, the tax advisory industry in the West was massive in terms of human capital. There were lots of people who were helping people sort out their tax returns. And then a company called Intuit was founded, and it basically created software where instead of talking to a tax accountant and paying him hundreds of dollars of fees for him to understand your affairs and prepare your returns, you basically they gamified the whole thing. So you just log on to their website or app, and it asks you a bunch of questions about your income and expenses during the year, and you punch it in.
I totally agree
and then
with you.
It throws out
Your tax return.
a tax return.
Probably files it for you.
So it's not the
for you
accountant that's important, but it's the developer. And we have that talent in abundance.
But I mean, let's go back
Right.
to this barrier that you guys have raised, right? Because I think you haven't explained it, because we must come to solutions. And the big barrier you're raising is, before I even change currency, if I set up a business process outsourcing company here, and I get 10 youngsters to work for less than 10 Indians on answering phone calls or doing reconciliations, and I charge a foreign client $100 per seat, the moment I receive that $100, before I even change it, it's now $60.
Because of retentions.
Yes. And then after I change it, whatever your view is on auction rate versus black market rate, but after I change it, if I want to buy loaves of bread with that money, the 60 is now 30. So I've got circa $50 left. But I received $100, and I actually haven't spent anything. If I get on a bus for 3 hours, 5 hours, cross the border into Zambia and set up the same business, if I bill my client $100,
you get $100.
I'll get $100.
It's chalk and cheese, and it's a game changer.
Absolutely.
And
the problem is, you could sort it out today in Zim, but the issue is what's going to happen in 2 years' time. See, that's the issue I have. That's the problem I have, is we sort of can sort out some of our issues today, but we all know that in the next 6 months or in the next 2 years, it's going to change again. Whereas in Zambia, you sort of know that
It's been the same since
you go to
Chiluba,
Botswana,
1994.
and you know what? Zambia is even a hard and difficult place to be. There's Durban, there is Botswana, there's Nairobi, there's Lagos. These are all the people that we're competing with.
But okay,
Right.
you mentioned Lagos. Lagos has got the same currency issues.
So Lagos currency issues, if you read in between the lines, is that you won't have the same problem that you had, right? So the problems in Lagos are when you're not a foreign currency earner and you want currency, then you have a problem. But if you're a foreign currency
If you've got your
earner,
dollars,
if you've got your dollars,
you get fair value for
you get your full dollars, you can use your full dollars. You don't have that problem. The problem is when
you've got Naira and you want
you've got Naira and you want to get into dollars. So you don't have that that sort of problem. But Lagos is beating and is eating everyone's cheese, especially South Africa, because I was quite keen on that. Why would Lagos have an advantage over South Africa? It's actually talent. It's as simple and straightforward as that you will find talent in. So look at the world of developers, for example.
Look at Nigeria's population versus South Africa's.
Yes. But
you know, it's like, highly skilled talent.
But also,
so it's not even just that; it's highly skilled talent. So when you look at you're looking for 1,000, 2,000, or 10,000 developers, where are you likely to find them? In Lagos or in Cape Town?
Well, remember the South African system for the longest time excluded the majority of the population.
Yep.
So it's going to take them a long time to build a strong skills base in the generality of the population. Whereas Nigeria has been at this since the 60s. Okay, they were selling degrees and whatever, but everybody got a good shot at education.
Developer, you don't need a degree. So they literally, you go through a test. So it's either you can code or you cannot. It's that simple and straightforward. Whether you have a PhD from wherever, we actually don't care.
No, but your basis.
Can you code or can you not code?
No, but the basis is your.
No, I'm just
your
saying
basic
that
education.
your jab is unnecessary.
Okay, maybe forget the degree, but your basic level of education, your basic Nigerian has access to good basic education, decent basic education, whereas the South Africans don't.
But more importantly, the IT skills, the developing skills, you will find them. But curiously, in Zimbabwe, you will find the developing skills. So the developers are here in Zim. We're training them. But unfortunately, they don't have jobs, and it's now becoming very difficult to cross the border. And
they're all becoming nurse aides. And this is a good place for us to take a break before we say something that will get us into trouble. We'll be back in a couple of minutes. Welcome back. So while you were away, you might have heard there was an interesting, shall we say, tiff between the Confederation of Zimbabwe Industries and the Reserve Bank of Zimbabwe. Did you guys follow that at all?
I did. I don't know whether you had an opportunity to read the back and forth correspondence.
As I flew in, that's the sort of news I got wound off, and it's quite interesting. When I left, the rate was at 270, and I come back, it's at 400. So maybe you can.
You were told that the rate was 270, and you were told that it was 400 because you don't dabble in these issues.
Yeah, no, I don't.
He heard, like we all do.
Yeah, we all heard.
So I mean, look, okay, let's start with the CZI.
I think they were.
What did they say?
I think they were objective. I actually applaud them.
Well, what did they say?
They said there's a. So I took time to actually read the statement.
Yeah, that's why we need you on the show.
Okay. So the first thing that they articulated was the currency problem, and they said it's akin to a run on the bank. So when you look at the rate, and that's why I picked up the rate, that when you look at the rate moving from 270 to 400, that's akin to a run on the Reserve Bank. So they were very, very clear about that this is akin to a run on the central bank.
So everybody's trying to get their money,
value.
their value
They're
out
trying
of
to
the
turn,
system.
Yes, they're trying to turn their Zim dollars into US dollar as quickly as they can.
Okay.
Right. So that's akin to a run on the central bank. So then the issue was, why is there a run on the central bank? And they sort of said, well,
before you say that, before you go on, they said it's irrational to cause a run on a bank.
That's where I was going.
Oh, okay. Okay.
But it's rational once the run is happening to participate.
To participate, yeah. So they said it's irrational. They quoted Marvin Keane, who was the central bank governor of the Bank of England, who said it's irrational to cause a bank run, but once the bank run starts, it's quite rational to participate. Which, if you think about it, I mean, if the rate is running and you have Zim dollars, why would you keep Zim dollars, right? So I thought that was a very succinct and very apt and very appropriate analogy, and it captures the moment there is a run on the central bank.
Okay. Correct. Okay.
There's a run on the Zim dollar. I think that's probably
because
there's a run on the central bank.
Correct. And then what are the central banks? And then they said a few other things that upset.
Well, then they went into what should happen and how we should not have a monocurrency. We shouldn't have a monocurrency. What we should have is the multi-currency that we currently have, and the conditions are not good enough for us to have a monocurrency or a Zim dollar currency. In fact, the expectation is the more you speak about a monocurrency is the more the market, you're going to have a run on your central bank bank. So that's where they were coming from. And they set out the conditions that are necessary, and we're not there.
And then what did the governor say in response? So I could feel his emotion in that response.
Well, first of all, he came out and he said so the first thing is he talked about FCAs. The CZI didn't talk about FCAs.
Well, they did say don't raid our bank account.
They said don't, but then it wasn't it was if you're turning into a monocurrency, what's going to happen to our FCAs? So then the central bank comes back and it says, we never said we're going to raid. They used the word raid. CZI did not use the word raid.
They say in their statement, raid.
Did they use the word raid?
Yes.
Well, central bank then came back and said, we're not going to raid FCAs. And the second thing is we didn't talk about a monocurrency. It didn't come from the central bank. The idea of a monocurrency doesn't come from us. That's what they said. Those are the two issues.
I think this is a great development from the perspective of...
You like to see everything as positive, don't you?
Firstly, one of my biggest gripes in this market has always been that the business community is given to being politically correct and is shy about speaking truth to power. And the CZI, and I must commend them for actually coming out and issuing a press statement, putting it on the record that this is their view. This is how they see things. This is their position. And to the extent that we have a response from the central bank saying, look, we're not going to raid, the 1.8 billion in FCAs. We are not talking about a monocurrency. So it's on the record, right? And if in the next,
they haven't been listening to the president.
So in the next 3 months or 6 months or 9 months, we will see whether these statements that they're making age well, right? Because and it's fantastic that there is this record, right? Because for the most part, I find when I engage other leaders in the business community, they find, their view is, look, you will get much better results, and if you engage with senior government officials privately, behind closed doors, face to face, and you allay your concerns. But I find that
Nigel sat there and said that a couple of weeks ago.
But this has been happening for the longest time, and the outcomes are not great, right? And so I think this approach where the business community calls out things in the public domain that aren't working, because clearly the auction is not working, right? What I loved about the CZI statement is it wasn't subjective. They were speaking to data, to facts on the ground. There is a backlog at the auction. This rate, it is not working. And their recommendations were not, pie in the sky. They were very specific. They were very pragmatic. So I think it's I'd love to see more of this kind of engagement in the public domain from the business community.
I agree.
And that's what we need. And if you look at the response from the central bank, they were on the back foot. They're not used to that kind of engagement. And perhaps that explains some of the emotion. Because they don't want to have these conversations in the public domain. They don't want to be held accountable in the public domain. But I think that if we're going to make progress, we must have these public engagements. We must be on the record about where we stand on issues, and let time tell us, whose statements age well.
But then CZI then came out with an apology.
Yeah, I think Kurai then made a statement again, but he was quite clear. He was doubling down, I would say.
I don't think it was the least bit apologetic.
Yeah, it wasn't. It was actually doubling down. Where he was he was like, okay, we met with the central bank, and the central bank has agreed that they're not going to raid SCA accounts, and there's no talk of a monocurrency.
Which is a fantastic outcome.
Which is fantastic.
But we still think that they must do a lot of other things to fix the economy.
The economy, yeah. So I think it was beautiful. It was the sort of engagement that we require, and the sort of discourse that one would expect from any country. But it's quite sad that we're having this discourse, right? There's an opportunity that we have in the world right now. If you read the news that's coming out of Zambia, is that China is now agreed to be part of the multilateral debt deal that Zambia is going to go through, right? Another debt forgiveness.
So China's
period.
So China's finally agreed that they're not going to take Zambia's power stations away.
Something like that, but be part of the multilateral discussion. Because now what's coming out is the number is above 25 billion, north of $25 billion. But this is the opportunity, or this is quite an opportune time to be doing such deals, right? Because the world is awash with cash, and the world wants to solve these problems. So this is where Zimbabwe needs to be. And remember, they got SDRs. So Zambia got SDRs, about $1 billion like us, but they also got $1.4 billion from the IMF to stabilize that period between them talking to their creditors and finalizing a deal. So to stabilize their currency, they then got currency support for about $1.4 billion. But now they've got a substantive deal, and this is the second time around, second bite of the cherry for Zambia. And here we are in Zim, and we've got this 20-year period where we've been in the doldrums, and we haven't come out of the doldrums. And this is it's quite an opportune time.
It's actually quite depressing when you put it that way, because what are we talking about in Harare in terms of raising money, issuing bonds as a country? We're talking about $100 million, right?
Which is not even certain we can raise.
That's crazy.
Between 2009, and the rest of the time that we were dollarized, Econet raised almost $1 billion.
Yeah, over $1 billion.
Right? If you look at the national accounts, okay, depending on what rate you use, Treasury collects between 2.5 and 3.5 billion US dollars every year in revenue, okay? And yet we want to do our first international debt raise at 100 million? Are we serious?
Pie in the sky.
No, I mean, look, in some of the other more serious African countries, a bank CEO won't get on a plane for $100 million,
Sure.
let alone a finance minister. It's something that's dealt with by somebody somewhere in the works of a single bank.
No, it should be a Zimbabwe Harare startup that's raising 100 million.
So this is the disconnect between, because I think our potential, right, everything that Zambia is negotiating right now in terms of debt forgiveness, in terms of raising money, we are similarly sized economies. We should be having those conversations as well.
With a better potential.
Well, I'll actually tell you what. You say we're similarly sized economies. I now work in FMCG. We're not.
Yeah, we know.
All the consumption figures, all the consumption figures point to
Zimbabwe being a bigger
economy. No, it's not.
I mean, you economists will disagree.
Yeah,
but this discussion has been had ad infinitum for the last couple of decades, you take all our big FMCG producers and you look at the consumption side by side with
Zambia,
with their
and
Zambian
even if-
peers.
do you remember the conversation?
And the numbers
during
are bigger here.
Do you remember the conversation?
Okay, so let's kill this argument. If you were to use that metric, then China would be twice the size of America.
Maybe it is.
But look, do you remember the conversation
Come on, guys.
during our GNU
Let's veer
when
off.
we were
and let's
raking
be
in
proper.
$4 billion US dollars a year in
You're,
revenue?
you're taking one sector of the economy.
Okay,
but-
anyway, okay, we're going down a rabbit hole.
Yeah, that's a rabbit hole. and
Let's go back to
these are the anecdotes that from now on, I'm going to ensure that we never go down.
Thankfully,
that
you
rabbit
don't anchor the show. But I mean, the big question, right? Okay, so you talk about that. Things are going wrong with
hole.
the
No, it's,
currency.
it's like somebody says, no, you know what, Zambia,
Okay,
copper mines.
No, okay, it's $10 billion. Okay,
You know,
Tinashe, we've moved on from that rabbit hole.
Okay.
So the currency is going the wrong way. Our greatest ambition is to raise
$100 billion.
$100 million. Inflation hits 96%. When the minister said, and the governor, were talking about numbers around 30 or 35%.
Yeah, 25 to 35% by the end of the year.
So, I mean, I don't know, I haven't actually tabulated, but I think already they've missed their target for the year. If,
Oh, yeah, no,
even if
they've
there's zero
missed
inflation for the rest of the year, I think
Yeah.
they've missed it.
They've missed it.
They've missed the target. So clearly, it's not working.
For the last 20 years, in fact, since 1998, there's been a disconnect between our economics and our politics. Since 98, I would say, there's been a disconnect. And I think that's the problem that we have.
But I think that's too simplistic.
Well, I thought you were
it's
going to
not
ask me, do you know what I mean by a disconnect? Elsewhere in the world,
I know what a
world,
disconnect is.
I don't think you understand. So elsewhere in the world, the minute you have an inflation number that's higher or unemployment that's increasing, it filters in the politics of the nation, right? Presidents win or lose based on the success of the economy. But unfortunately, first of all, there's a disconnect in Africa generally between economics and politics. And more specifically in Zimbabwe, there is a wide chasm between our politics and our economics. So I don't see anyone in power politically reacting to economic news the way that they should.
But I beg to differ. So I recognize what you're saying in terms of the disconnect, and I think that it's true pretty much everywhere in the world. So governments, by their very nature, they're more like doctors than pilots. Okay. So what do I mean by that? What happens with doctors is they bury their mistakes, and then they get to make more mistakes. But pilots don't. When they make mistakes, they die with their mistakes, and they don't get to make more mistakes. And governments are a lot more like doctors than pilots, because even in the world's most democratic countries, the politicians there's a disconnect between them and the electorate, and as long as they can sell some narrative to explain bad performance, they might actually get re-elected. It's not always the case that in a democracy, a politician who fails gets fired. So that disconnect has always been there. But I think, so George's point is actually quite interesting, which is, why are we continuing on a path of policies that have a well-documented history?
You're just explaining the
failure.
disconnect. You're just explaining the disconnect.
No, what he's saying is we know what a disconnect is, but and what he's saying is it exists in all countries. But my question
Although
is,
I beg to differ, but
my question is,
that's not the point.
if that building at the corner of Simon Wenga Mzenda and Samora Machel, you don't even know what road that is.
Second Street
No, it's not Second Street. It's 4th Street.
or 4th Street. Okay.
If that building is full of people that are like you and me and just want to do a good job, and if 80 Samora Machel, I think it's 80, is full of people.
RBZ,
Yes.
the tallest building in Zim.
I don't know if it is, but yes,
Or
that
in
is.
Harare, yeah.
The tallest building is in Shani, actually, believe it or not. But anyway, that's
an
a rabbit hole.
Yeah. Turns out it's not.
Okay, no more of that coffee. If all these people want to do a good job, and it appears that with their best intentions they've embarked on a course that is not working, why are they continuing on that course?
There are no consequences.
No, but it's not. No, but they want to do a good job.
No, there are no consequences of doing a bad job. Elsewhere, it's interesting when I had lunch today. It's interesting. Somebody was articulating the problems that they have with their wife, and they said, you know what, if they were my employee, I would have fired them. But it turns out they're my wife, and I can't just fire them, right? But that's the disconnect, right? That a lot of these employees, a lot of these politicians, if they were in a normal company, they would have been fired a long time ago.
But it's even getting to a point where it's harder work for them to justify why they continue to do this than it would be just to change the policy. Why do they continue?
There's no,
And also,
there's no cost.
no. But look,
There's absolutely no cost.
that's a very simplistic way of looking at
That's
it.
what I said 5 minutes ago. I said he's being very simplistic.
I think that
Well,
we
then
can
give me the alternative.
So here's the alternative.
know.
Here's the
Give me the
alternative. I think
I don't
that-
know what the alternative.
So everywhere in the world, right? It's in the interests of the people in public office for the economy to do better instead of
Why?
worse, right?
Why?
So even if it's an autocracy, like China, for example, right? In fact, that's a great example because the
China is not
legitimacy.
a good example.
No, it's okay. I'll explain why I think it's a good example.
Use Saudi Arabia.
Okay, even in a place like Saudi Arabia, right, where they make no pretense at being open or a democracy, right? If you are the monarch, if you are running the place, right, you are more secure in your position, right? If you are not hated, to quote Machiavelli, there's that interesting passage in The Prince where he talks about, is it better if you can't be both
Loved and feared.
loved and feared, is it better to be which of the two is better? It's always better to be feared. But he makes the point that you don't want to be hated. Right? It's never in your interests
To be hated.
to be hated. And one of the sure ways that you're going to be hated is if you impoverish your citizens, right? So it doesn't matter what kind of government it is.
Okay, so
you don't want to be hated.
But then what happens even in Saudi Arabia or in Zimbabwe? And I'm actually making the case that Zimbabwe is worse than Saudi Arabia because in Saudi Arabia, there is, within the monarch, it's actually quite competitive. So within the actual monarch, so while it's not a democratic nation, but within the monarch, it's actually competitive. Similarly, within the Politburo of the Chinese Communist Party, it's actually very competitive, right? So it's actually, there's no disconnect between the economics and the politics. In fact, in China, it's for you to rise to the top of the Politburo, it's primarily based on your economic performance in your provinces, in your
you rise up. It's a meritocracy.
It's
The
a
Communist Party
meritocracy, and it's a meritocracy based on what? On economics. So there's no disconnect between the politics and the economics. And all I'm saying is, in Zimbabwe, in Africa, there is a disconnect, but worse off is Zimbabwe, where there is a serious disconnect between our economics and our politics. But you started off very well when you said, even in the first world, even in Western society, there is a disconnect, but it's to the extent of the disconnect, right? I think we both are privy to the studies that have been done that in America, for a president to lose, it's usually because of, it's purely determined by the economic performance in your presidency. So if the economies do well, you're likely to be re-elected, and if the economy is doing badly, you're likely to. But yes, there is some correlation there. And we're saying that in Zim, there's a serious disconnect between our economics and our politics. That's why within a 5-year period, within a 10-year period, we've changed currencies 5 times. And there are no consequences whatsoever, right? Since 1998. That's why I used 1998 as a disconnect period, because that's when we started seeing problems, right, economically. But the politics hasn't changed. So that's why I'm making the assumption, and it's still an assumption, it's still an opinion, it's still my educated opinion, that the problem in Zim, we cannot expect our politicians who are in charge of our economics to change when there are no consequences for them. We saw what happened with Mugabe, right?
Are you going down a political rabbit hole?
No, but you raised the question, and I'm just answering your question according to my educated opinion, which is there's a disconnect, a serious disconnect. It's seriously my opinion.
Yes. And you're entitled to it, and I respect your views. But I tend to see things quite differently because I think that notwithstanding the reality of that disconnect, let's take what you're saying as 100% correct, right? They would still be better off running a $100 billion economy instead of a $20 billion economy, right? Every minister would have a private jet. They would live in a palace.
They still have their private jets.
No. Ministers in our country don't have private jets.
And be careful. Be careful of libel suits.
They're still hiring private jets.
No, but the scale, the scope and scale.
You're quite
James,
right.
we need to go for a break.
Just to reply, it just means that they're not as ambitious as you think they are. They should be.
Okay, I think it's a good time.
Now we're gonna go for a break. I don't know these guys. Anybody who's interested in where they live, I'm happy to share their addresses. They're not my friends. We'll see you in a couple of minutes.
Sawira huya timborangana timboronga tichine mkana andirambe ishe ninovuma kana mati yangu nguva yakwana sawira huya timborangana timboronga tichine mkana daita isivara mangwana taingovunza ndewani mukana dainda isivara mangwana taingovunza nderani jana sawira huya timborangana timboronga tichine mkana sawira huya timborangana timboronga tichine mkana daita isivara mangwana taingovunza ndewani mukana dainda isivara mangwana taingovunza nderani jana sawira huya timborangana timboronga tichine mkana.
Welcome back. Okay, and we're not going back there. And if anyone wants to know where he lives, you can talk to me. I'll happily give away his address as long as you leave me alone. But it's been an interesting week, eh? All sorts of, shall we say, interesting things happening.
Mm-hmm.
Here, you guys, the stockbrokers, have been changing the rules.
Yeah, so I think it's important to just contextualize what's happened in terms of this development on the market. 2 years ago in July 2020, we had actually a similar macroeconomic sort of event or problem, in the eyes certainly of Treasury, the central bank, and the government, that the power market was running away, and obviously in sympathy, prices on the stock market were also running, and there was this conspiracy theory that Old Mutual was somehow fueling, inflation via pushing up the rate on the power market rate. And so we saw the stock market being shut down for 30 days. And when it reopened minus Old Mutual and PPC. So I think we're in a similar kind of space from a macroeconomic perspective at the moment in terms of what we've seen on the power market. If you look at the last 30 days, the rate went from 250 to circa 350, 360. If you look at what's happened on the stock market, you've seen a really aggressive bull market. And even the official inflation print, for April, which came out this week, 15.5% month-on-month inflation, which if you compound for the rest of for 12 months will give you 435. So
Tashi doesn't like that, so we're not going.
So we can annualize it and stick.
Annualize.
If you annualize it, you get 186, which is
okay, that's a lot better.
But anyway, you cut it,
prices
right?
are going to treble.
These numbers are bad, especially in the context of a country that is going into election season and wants to have a narrative of the economy is doing great and it's going to get better. So this is the. I think we can agree without controversy that these numbers are bad. And what we saw in 2020 is that there were all these scapegoats that were created. Because, fundamentally, the problem is money supply growth. It's printing, right? but all these scapegoats were created. It was
Old Mutual.
it was Old Mutual. It was
TPC.
these traders who were pushing up, raising the
Forex
power market
traders.
rate. So this week also what we've seen with Inbucks, we've seen with a couple of other names in
Metbank,
Metbank and Access
bureaus,
Finance.
yeah.
Right. The state stepping in and saying the reason why the currency is running away is because you guys are behaving badly, and we're going to step in and.
Well, in fairness, they said you guys are operating without licenses.
But if you read between the lines or if you analyze it, well, the reason why this happened this week instead of 30 days ago, 60 days ago when the movement wasn't
6 months ago when Inbucks was introduced.
right, and it's not like they rolled out into the market secretly and and have been operating under the radar until now. No, they knew about these guys, but the reason why all of this policy action is happening right now is because the rate has moved so much right now. And this is something that they seem to be very interested and concerned about, and they've taken action. So, so what we've seen on the ZSC is basically a sensitivity to that concern. And this is basically a gesture to say, look, we understand that you're concerned about prices moving aggressively and potentially fueling the power market. So we've taken this action that's going to make it harder, because basically tightening the circuit breakers means it's going to take a longer time.
What does it mean?
So if you, in the context of before this action, the circuit breaker level.
What's a circuit breaker?
So a circuit breaker, basically in a market like a stock exchange, people trade freely, and the circuit breaker is basically a rule that when certain things happen, it breaks the circuit, it stops trading. So as far as prices are concerned, the way a circuit breaker works is if a share price moves beyond a certain level, the circuit breaker comes in and it does not allow you to trade beyond that price. So before this announcement, that level was 20% per share. So a share price on the local bus can't trade more than 20% higher than the previous close. That was
it can't increase more than 20% in one day.
Yes. So basically, what the exchange has done is it's tightened that range. So the 20% circuit breaker for non-penny stocks moved from 20% to 15%, and for penny stocks, it's moved from 100% to 20%.
Penny stocks being small companies.
Yeah, the much smaller caps on the market. So basically, whatever's happening with inflation, it's just harder for it to manifest on the ZSC. A little bit harder. I mean, to be fair, 15% is quite generous, right? So because in a week, that works out to almost 100%, which for a week
more than that because you compound.
Yeah. So
you understand compound. Okay.
Yeah. But you can't compound in inflation rate.
So to be fair, it's still quite generous. So if we do have violent inflation, the stock market will still be able to express it in share prices. But it's a gesture, it's performative. Basically what the ZSC is simply saying is, look, we are sympathetic to your concerns about runaway prices. But, does it move the needle on the ground in reality?
What are your thoughts on when you look at the stock market now? It's valued, $10 billion?
Look, I think that, and I've thought this for a minute, for the, certainly the last 6 months plus, it's overvalued. The earnings, the numbers don't justify the valuations that I see. Well, that's my personal opinion.
So you say in general the prices are too high on the stock exchange?
Yeah, but you see,
they keep getting higher.
But and chances are this trend is going to continue because you have a universe of capital market players whose hands are tied.
That's the only market they can play in.
Right.
But how come we're not seeing the same with real estate prices? You would expect that, the same players can still play the real estate.
No, that's actually not true.
Oh, okay.
So if you are a regulated asset management company, and you're making investments on behalf of pension funds, you can buy property, but in dollars. But the property market is mostly dollarized. So effectively,
I'm making the point that if you look at the implied rate of exchange based on the market cap of the ZSE, you're looking at an implied exchange rate of close to 800. Right?
No, but I
Depending
don't.
on what
No, but I don't think you can look at it like that, Smash. I think Rufaro's got a point because of. I don't think it's about the currency, but I think it's about the liquidity, right? If you've got a little bit of extra money, a few extra Zim dollars for a bit of time, which is a thing with most of these institutional investors, they get their premiums at a certain time. They know that they've got a certain cycle for claims. It's much easier to sell shares and pay your claims than it is to sell a house to pay your claims. So there will naturally be more demand. If they were able to buy US dollars, the first thing they would buy would be US dollars and hold them. And then they would go for shares second and things like property third, things like private equity.
Yeah, because of ticket sizes and liquidity. But our property sector is mostly USD.
Okay, so the point I'm making is it's all about implied exchange rates.
Yeah, but that's a dangerous discussion to have.
So implied exchange rates, no. They tell us because it feeds into expectations. This is in economics, the inflation rate is, so the equation for inflation rate is, if you're doing a time series, it's inflation rate, today's inflation rate, plus expected inflation.
But
so I'm saying that if guys have got an implied exchange rate on the ZSE, that exchange rate on the ZSE is feeding into our inflation expectations.
No, and I'm saying no. Again, you're being too simplistic because remember,
simplistic.
Yes, you're being simplistic. You need to get
Tinashe the simpleton,
the simpleton. You need to change your hairstyle
Simplistic
and start dressing normally. Because remember, when you're going into the stock exchange, for the reasons that a lot of the investors are going into the stock exchange at the moment, you were going to have value losses if you held Zim dollars. So you go into the stock exchange, perhaps even anticipating losses, but the losses on the exchange will be lower than the losses.
Holding a bank balance.
Yes.
And I am simply saying that there's a reason why the market does not. There's a reason why the market is at 10 billion and not 50 billion and not 100 billion.
We agree.
Right. And I'm saying that, and it's not 2 billion. So whichever way you look at it, and I know you want to run away from this argument, but there's an implied exchange rate.
Of course, there's an implied exchange rate.
There is an implied exchange rate, and that implied exchange rate speaks to what is actually happening, whether we agree with it or not.
But it's subjective, you see.
It is. It's absolutely subjective.
And I don't even want to call it an exchange rate. I think there's a rate.
So
if you divide the one number by the other one, you get an answer.
I think.
All right, this is for simpletons. So please,
let's
have a simple argument.
This is why there was such heartburn and consternation around the old mutual implied rate. Okay, because not because the actual stock old mutual had anything to do with what was happening on the power market, right? But it was the only legal channel for you to buy something that was a proxy to currency.
So you and take a loss on it.
Right? And so it became kind of like a formal parallel market rate. And this is really grated at certain offices. And that's why it was removed. So, but none of the counters listed today are actually direct proxies to currency. But we can imagine what
guys, okay. There are people who find implied rates in the McDonald's burger, in boiled...
the hard-boiled egg index, yes.
I've seen that. Why can't I have a ZSE implied
no.
rate?
You as Tinashe...
Everybody has everybody has
one. I'm saying
there's
everything you can have an implied rate. But I think you're trying to moralize an implied rate. There's no morality to it.
No, it's not moralizing.
Not moralizing.
Because you're saying there's no implied rate. And I'm saying there is an implied rate.
No.
There is an implied rate.
Let's go back to what you're saying. You see, Yes, there's a hard-boiled egg index. There is a McDonald's index.
Yeah, it's an implied rate.
No, it's an index. Let me finish my argument. That index.
Are you saying that there's a difference between an index and an implied rate?
Can I finish my argument?
Okay.
You can respond.
Make it simple, please.
Yes,
Remember, I'm a simpleton.
Yes. Something happened to you on your travels. That index informs your view of the value of the currency. But it would be unwise to pick any one index and take that as an exact proxy of the currency value. Because as you point out,
that's not what I'm saying.
As you point out, there are many indexes.
That's not even my argument. My argument is in the world of implied rates, there's this one that has an implied rate.
Okay, so let me simplify.
In the world.
Okay.
Let's go back to
so George. Let me
let's
help you guys with some clarity.
Let's go back to the meaning of the word index. What is it?
You guys are getting lost in semantics. I think I can merge your views in a way that you will both agree with. Okay. So between 2000
Elon Musk cult.
Between 2009 and arguably 2016, we were.
You know the Elon Musk cult.
Okay.
No, how does this have anything?
Something happened to him.
No more coffee for you. Anyway,
too many croissants.
You can upset the right and the left equally. That's the Elon Musk cult. No, just for the viewers so that they understand what the Elon Musk cult. And he belongs to the Elon Musk.
Oh my gosh. Anyway, between 2009 and arguably 2016, we were a US dollar economy, right? And if you were to cherry pick our best year in that period, when the economy was pumping, the US dollar market cap was say 6 billion. Okay, so if you say, look, we're not doing better than we were doing then, right? So a reasonable cap for fair value of our market, 6 billion USD.
Minus Old Mutual? Minus PPC?
Yes, we can do that math. It's not hard. So you make adjustments for Old Mutual and PPC. You can say, okay, fine, this is what,
we'll use as an index.
Fair value.
Our base.
Or like, if Zim is having
That's
a good...
an index base.
If Zim is having a good day in the context...
Index.
If Zim is having a good day in the context of the last 10, 15 years, the stock market should be valued at this US dollar value.
And we call that
Then you can then look at the Zim dollar value and then say, look, this is the implied rate. Yeah?
Yes.
Yeah.
That sounds reasonable?
Yes.
Yeah. And you will find that... you'll find that that rate is significantly higher than the current power market rate.
But not as high as...
Look, I haven't done the math recently, but it's...
No. I mean, simply put, right? You said, let's say 6...
Oh, have you become a simpleton as well?
I must accommodate my present company. You said if we set the base as 6 billion,
Yeah.
automatically anything above 6,
Assuming either we're doing phenomenally well as a country and economy, or the rate is...
Or it's not real value.
The market is telling us where the rate is going.
No, the market... No.
Or it's implying a certain rate.
No. First, we're starting by saying, no, it's not real value. So you got to discount it back to the 6.
To some extent, yes, I agree.
So anything between the 6 and the 10 is not real value. That's the froth. The beer is actually at 6.
Yeah, okay, I hear you.
Or its expectations.
No, he's quite like his analogy.
Yeah, but it's either or.
And you're
so
saying
then you can imply a rate.
I'm saying
it's implied.
And I'm saying it's too simple to simply say it's an expected rate. I'm saying because there's so many other factors in there. What I will accept is that it's an index. Which means, and the word index means to point. It's pointing, it's suggesting something.
Or implying something.
Yes. Right. I'm going to end the show now. It's been lovely having you on. I don't know what is the coffee. It's been good having you on. And as usual, don't take us too seriously because we don't know what we're talking about. As you can clearly see, someone went away for a couple of weeks and came back with educated opinions and
became a simpleton.
But yeah, it's always good meeting in the usual place with people that you like and trying to solve the world's problems. You don't, as you can see, you don't need to know anything about it. You just need to have an opinion. And as iron sharpens iron, let your opinions rub against other people's opinions and see what we come up with. And when we have the occasion, let's share some of these arguments and opinions with people that make policy and see if we can't make this a better Zimbabwe. Have a lovely weekend. Stay safe. Be good. If you can't be good at it.